Max.
Yes.
Okay. Given your background and role at the Energy Policy Research Foundation and your proximity to Washington, D.C., how do you gauge political sentiment from the behavior of energy stock prices so far? What's your view on that, Max, since the election?
Yeah, since the election especially. Thank you. Thank you for the introduction, Bob. As a prelude, Bob and I are that close to the same age. Some of you might not get this cultural reference. But a long time ago, there was a television program called Twilight Zone. And this narrator had very serious demeanor. He always started the program with, imagine, if you will, another dimension. So in this case, I'm asking you to imagine, if you will, my slide deck, which I didn't produce. So I'm going to try and just draw it out in space here. So we gauge future sentiment through the behavior of energy stock prices. And what I'm seeing, and I don't know if my colleagues here will agree, but there's a certain divergence that's taking place if you look at the different sectors. If you look at the integrateds, Exxon, Chevron, if you look at the upstream players, ConocoPhillips, Occidental, if you look at the refiners, if you look at the drillers and service operators, from the point of the election, you see prices go down to a trough, and then they come back up. The trough is the Fed decision in mid-December. And then they sort of wiggle around, not quite having fully recovered, but wiggle around with this 48-hour, 30-day postponed trade war that we had earlier in the week. If you look at materials and petrochemicals like LyondellBasell and Dow, the coal producers, the lithium producers, solar PV, it's just going straight down. However, if you turn your attention to natural gas and electricity, specifically EQT, the producer, the upstream producer in the Marcellus, LNG interest, Cheniere, the pipeline operators, Williams, and Energy Transfer, then it's definitely much more on an upward slope since then into the election. If you're looking at electricity, Constellation, Talon, sort of flat, and then from the beginning of the year, definitely upward. So I think this is the foundational interest of our discussion for this evening, the divergence in the flat to downward movement of petroleum and materials, and the upward movement in natural gas and power.
Thank you, Max. Thank you. Gentlemen, either one of you have a comment on that? Mark Rossano?
So I think an interesting point which was brought up was talking about natural gas. And the interesting side was when I actually did a podcast on this in early November, was looking at what was going to happen to basis and differentials. And you've actually seen this huge change because we got really good at bringing natural gas from the north to the south, which after we figured out the Marcellus, because for anybody who ever invested in Cheniere at the very beginning, we were actually going to import gas. And then the Marcellus happened, shale happened, and the world flipped on its head. So now we've gotten really good at taking natural gas from the north to the south, but you need to drop it off along the way. And good luck trying to get look at Mountain Valley Pass. You know, you look at Constitution that failed in the north. Now all of a sudden you have all this gas going south, and there's going to continue to be this pivot, and you're going to get this basis differential where the Northeast is going to have a higher premium than, say, Waha, where Waha is where a lot of the Permian dumps in, because for those guys, they just want the oil. Gas is just a byproduct, and so you're getting this big shift.
So for Waha, so if you don't know what Waha is, that's Permian.
Thank you.
West Texas.
Yeah, so, and now you're getting these big shifts, and now the question is, how are we going to debottleneck? Right? How do you build pipelines? How do you build some of this capacity? Because as Max was talking about, you've had power prices go up, so do you convert some of these peakers into something that's going to be more stable? Can you build more gas turbines? Because the running joke is, if you call up GE and say, I want a turbine, they'll say, sure, do you want it delivered in 2029 or 2030? So realistically, it's like, you may want it, but it doesn't mean it's available, and then that comes to transmission, and there's all of these issues that continue to build on itself, and that's where some of these guys that have the pipelines have the capacity, will continue to benefit versus some of the others that are going to lose their producer tax credits, their PTCs. You know, you've already seen wind lose some of their subsidies, and that's really going to impact some of those economics versus something like a natural gas, which is going to have something more sustainable.
And Mark, before we go to our next question, I was going to ask you real quick, for the uninitiated in the audience, peakers, can we define that?
Sure.
Please? Thank you.
So a peaker plant is something that comes on when you start getting towards the peak of demand. So the biggest issue is you have your base load, which is going to give you some of that base, and then you guys go home at 6 p.m., you want to turn on the air conditioning, you want to turn something else. Now all of a sudden you get this spike. Now the peaker plant is meant to come on and anticipate. So a peaker plant technically can turn on in under 3 hours. So you see something coming, so at 3 p.m. you start warming it up, by 5 p.m. it's firing, and you're in your peak shading. So you should only be utilizing, I have a utilization rate of 10 to 30%, you know, on average per year. We're hitting 60, 70%. So that's where you're starting to have these issues when you start to get to that peak, which is creating those bigger problems.
If I could just add to this notion of a peaker plant, one of the things in electricity is it's a simple operational understanding. You have something known as a ramp rate. How quickly can you meet load? Load is the jargon for demand. So something like a nuclear power plant, a traditional nuclear power plant, you have a very slow ramp rate. Coal, same thing, a very slow ramp rate. How quickly can you meet the generation that you're going to need, the load that you're going to need in the evening hours? You have combined cycle for natural gas, a little faster, but peakers, as Mark describes, I think they're single cycle. They're the ones that are the fastest as far as meeting load. You also have hydro, which is, I think, fairly quickly dispatchable. But that's
Yes.
We'll get to that.
Yes, terrific. But Max, while you have the floor, why don't you give us your view on what Washington thinks of the Trump administration's approach to energy policy at this point? What's the view from Washington on that?
Okay, I'll skip ahead. Obviously, the leadership, it's fundamentally favorable to energy, legacy energy producers. The leadership DOE, Interior, EPA, all are pretty much aligned with, they understand the problems. Critically at FERC, there's going to be a rotation, but all the commissioners are very astute as far as the problems with electricity. But I'd like to highlight just some things that, the problems that they're walking into. Is that all right?
Sure. So now you're going to talk about U.S. and global energy markets, or?
Well,
go ahead.
I had some other things to say, but one of the things I would like to say is just, there were a lot of problems that the Biden administration created, and so it created a lot of uncertainty as to how much capacity to maintain or retire. So you have situations. There's an RTO, PJM, Philadelphia, Jersey, Maryland. If you really need to know those things. Covers Northern Virginia, Pennsylvania, Jersey, Maryland, and certain states in the mid-continent. In that particular RTO, a generator only has to give 3 months' notice to retire the capacity that they have connected to the grid. That creates a distinct problem. You can't replace, say, a 500 megawatt coal plant in 3 months. You can't bring it on, build it and bring it online. So that's an issue. And then one of the things that the Biden administration proposed was these 2 countervailing rules by the EPA. One was the tailpipe rule, where effectively, through the control of emissions from the tailpipe, it would force huge electrification, or whoever could afford it, electric vehicles by 2030. So you need much more generating capacity in order to charge those vehicles. The flip side is that you have the power plant rule, which was promulgated, and what it would do is just force the early retirement of coal generation and a lot of natural gas generation. So one rule in EPA, more electricity required. Second rule is less electricity produced. So it's one of those kind of situations where you lose your trust in government, or You could say other things about the situation. So, and this, we're in a situation where we're coming out of 20 years of very flat demand, power demand, thanks to huge efficiency gains in computing power, appliances, any number of other things. But we're at a pivot point. We've had a huge ramp up just in data centers, in the data centers that we have proliferating across the country. And you need power. I'd like to share a story, if that's
Please.
okay. So Bob mentioned that we're a public policy shop. That means we're not for profit. We have trustees. One of our trustees is Jeff Kissel. At one time, he owned a company. He was president of Hawaii Gas, and he left that position. We met first in 2016, and he said, "Well, he's from Los Angeles. I don't want to sit around the kitchen doing nothing. I think I'm going to get together with some of my friends and start a hobby." So that hobby has grown into an $18 billion company. It's called Global Infrastructure Solutions. It takes a portfolio approach to acquiring construction and engineering management firms. And the big thing they're doing now is building data centers. Their manager in this venture is a guy named Dan McQuaid, and he says, people are just looking for power. Any place you got power, that's where we're going to put a data center. Iowa, they corner what they can of the market. They get friendly with the governor. So it's that element.
No, it's a good story. Good insight. Good insight.
I have more comments?
Yeah, please, by all means.
Okay.
So are you going to talk now about the...
I still a little more about the, I want to mention, what's a policy legislative target.
Yes.
And I want to finish off with some stories about
Please.
electricity, because electricity is du jour. So one legislative policy target is definitely the International Energy Agency. The International Energy Agency provided the gold standard on data collection and energy publishing since 1974. They seem to have become unmoored from that particular trajectory and have become advocates for what's known as net zero, beginning with their May 2021 report. It's clear to me, just in some of the things that I've seen in the last few weeks in Washington, is that people are going to come after them. The IEA relies on funding from its member countries. The United States is obviously a very large funder. Senators, congressmen have got, there's a target on the IEA's back, so something's going to take place there. Pushing forward, just two concluding stories. First, I'd like to draw your attention to a FERC hearing as on November 4th, 2024, where all the commissioners met with all the executive vice presidents and other people, interested parties, and they had a really serious discussion about load forecasting. Nobody has a good handle on load forecasting, meaning how much power are we really going to need? And there was an expression during the course of the discussion. It's a 4-hour YouTube video you can watch. Don't watch the whole thing. Watch the first hour. And a lady from AEP comes up and she says, one of our problems is the big tech people, Amazon, Microsoft, etc., come into our jurisdiction and they start going to the utilities and say, we're going to need 500 megawatts of power. But they don't just go to one utility, they go to several utilities. And eventually this information comes back to us, and we're asking the question, do we need 500 megawatts or do we need 2,500 megawatts? So that affects capacity planning right there. That's a critical point there. It's also illustrative of the culture of big tech and the data center people. They're very aggressive. Failure is acceptable. Just you want to acquire. You have you're set on this particular target. A countervailing example of this, we have a sponsor, one of the integrateds. Without naming who it is, they told us, they solicited our opinion on this, is that they like to get potentially into the power generation business. But a very different culture, very much call it a lightning rod, and they don't want to get burned again. And so they're very cautious about how they're trying to acquire generating assets, whether or not even to get into CCS, things of that nature. And the second thing, and this will be the concluding comment that I'll make, is we're looking for some kind of generating relief to meet all this potential demand that we're foreseeing, just from data centers and potentially from AI. Not too long ago, there's an independent consulting firm called Grid Strategies released a study forecasting how much load they thought there would be needed in the near term. Their high number was 128 gigawatts. So we were talking plant design and different kinds of plants. Their combined cycle is probably a more efficient way to go for natural gas. Thinking about 128 gigawatts, you need about 200 million cubic feet of natural gas to provide power over a 24-hour period. Go through the arithmetic and basically come out to a number of about 25 billion cubic feet per day. If you look at what the United States is exporting right now, both pipeline and LNG, just the gross number, not the net of Canadian imports, we're exporting about 25 billion cubic feet a day. So right away, that's advertising contention. Somebody's going to compete for those resources unless you have more production upstream, Toby Rice, EQT, just draw as many things out as you possibly can out of the Marcellus. You're going to need more pipeline capacity, or somebody's going to fight for these resources and the prices are going to go up. Mark referenced Mountain Valley Pipeline. That you needed serious legislative action in order to get that the last 6% of that pipeline completed. We're probably not in that kind of an environment legislatively, or definitely in the White House, but it's, unless something moves in the midstream, I foresee contention.
Okay, thank you. Mark or Mark, either one want to comment on that?
The one fun thing for anybody who's had to read the IEA reports, as I have, it shouldn't surprise anybody that everyone is like, this is terrible. There's actually infighting with the IEA just because there was a directive to push the renewable, and when everybody pushed back, and when it comes to planning, and then for anybody that follows OPEC, OPEC has actually replaced Rystad and the EIA with OilX and Kepler. So you're actually watching people get more and more into some of the niche guys that are pushing an agenda, which is quite interesting.
So Mark Rossano, while you have the floor, I'd like to get your take on interest rates. Now, we talked about the thesis being that power is important and that we're short on power, okay? So what happens with interest rates? How do interest rates come in to affect this whole milieu?
So the fun thing is, when I was at COP28, I kept hearing all of the government guys saying, oh, we have to cut rates. And it's like, that's adorable that you think the Fed can do that, but they can cut rates, that's the overnight rate. The market sets the yield curve. And as we continue to print money, as we continue to run a deficit, well, you're increasing the amount of paper that's currently floating in the market. And eventually someone's like, you know what, that 4%, I need something higher than that. I need something 5%, I need 6%. And all of a sudden you got this issue in terms of the liquidity problems, which I don't know if you saw, the Bank of England has aggressively cut rates. There's a panic now in Europe because they have been in a recession essentially since 2011. So the issue that has come to pass with what do you do with what comes next and rates. So my comment has always been where you don't need lower rates, you need to change your hurdle rate. You need to look at what are the economics you need to be successful. And we got so used to 1%, 2%, that solar, some of these other things, these zombie companies, which became the comment of choice, was there was no issue or no point of how am I getting to cash flow. It's like, oh, we'll figure it out later. Now, as the bond bull market implodes after 50 some odd years, and you're starting to see rates come back up, the focus is coming, what is your cash flow? Show me your cash flow. We've had some meme coins of I want to be an overnight millionaire, but where are we actually doing the research? Where are we focusing on long-term growth and long-term yield? And my running joke has always been, higher rates fixes this, because it forces you to think critically about what are my economics, what is my LCOE in terms of just how am I going to actually grow into this? Bob brought up an important point, which is, I always liken it to Maslow's hierarchy. You need, food, water, safety. And safety, and they think of what we need, it's electricity. I mean, electricity, anytime you had a massive increase in economic growth, economic throughput, it's because the BTU value has gotten denser, power has gotten cheaper, energy's gotten cheaper, and then we've seen this big expansion. The problem, and then it comes back to infrastructure, and Max pointed this out in terms of just the focal point, there were so many competing issues that rates got to such a point where it's like, well, I'm just going to leverage my balance sheet. Like, why do I have to innovate? Why do I have to create something? I can just do some financial manipulation, increase my paycheck, but I don't really care about infrastructure. So now we're behind the 8 ball by such a wide margin, and this is happening after we squandered the last 20 years of QE, and now we're coming into a tightening point. The balance sheet is still $2.7 trillion at the Fed, above where it was just in 2020. So how do we balance this? And we really have to get serious of focusing on things that are actually going to generate some sort of yield.
Actually, starting my voice is a little bit of laryngitis. I think he used to say you have to choose between guns and butter. I think you have to choose between green and prosperity. 35 trillion in debt, all the G7 has accelerating debt, aging populations, slowing growth, and we're putting trillions into negative IRR projects known as wind and solar. And we're purchasing a lot of this from our adversary, the CCP. So I think that's why Larry Fink, who pushed a lot of this last year, said, well, the problem with wind and solar is not dispatchable. What that means is the value of the electricity from wind and solar is less. And all the LCOE math shows it the same as baseload. And we were talking before about peakers and combined cycle. Here's the physics of it. What makes a peaker great, you turn it on fast, but it's about 30% efficient?
Yes.
And combined cycle, 60%, right?
Yeah.
So you want to do combined cycle, you don't want to do peakers. If you have a lot of wind and solar, you need a lot of peakers to make up for how intermittent wind and solar is. So the great thing about AI and the huge power demand that it's going to generate, I think it's quickly throwing out the window the idea that we got to spend another 50 trillion on wind and solar. It's silly. We should stop it immediately.
And to build on that point, which is fantastic, for those that remember Uri down in Houston, in Texas, these peaker plants. Now, it's a peaker plant, so I'm not going to sign on a long-term contract. I'm going to have what's called an intermittent contract, where I'm just going to take from pool gas as it's available. But what happens if it's not available? Now all of a sudden, because as somebody like in Energy Transfer has a decision to make. They have to protect the consumer, us first. So the first person to get canceled is the intermittent contract. So now the peaker plants aren't coming online. Well, and then the next thing that they take down is the industrial. So now the industrial are the guys that are producing the natural gas to keep the pipelines going. And you have this cascading impact. And then when you looked at, and Max talked about PJM, you look at SPP, which is Southern Power Pool, which are taking over other regions. They looked at what people were expecting, and a lot of these areas were expecting 13% utilization factors for solar in winter. And they laughed, and they said, there is proof that it's 1%. So expect 1% and be happy with 3%. What ERCOT had was 38 gigawatts of wind available to back to the dispatchable side, but the wind wasn't blowing. So all of a sudden, they were expecting to have 23 gigawatts of wind available during Uri. They had 4. So all of a sudden, you have this massive capacity where you thought your peakers were going to come in, and your peakers fail, and that's when you got this cascading failure, which we continue to see happen over and over again.
But please,
Just, some an anecdotal way of trying to express what you just said. So to back up wind generation when it doesn't occur, Texas legislature has considered providing subsidies to gas peakers. And one person described this, well, you're basically in a subsidy spiral. You provide subsidies to what you really want, but in order to make it work, you provide subsidies to the next thing, and then eventually you just keep going in that direction. And as one wise man in Washington once said, eventually you run out of other people's money.
That was Margaret Thatcher.
A question for the group. So the topic of the night, of course, is investment opportunities, and a lot of what the three of you have just been pointing out is some of the areas where over the past, say, 20 years, it was assumed that these were areas that were ripe for investing, and the opportunities were going to go on, wind, solar, and so on. And from the stage you've set, you're starting to tell a different story about that. In the olden days, for those of us that were involved with alternative energy in the 80s, the rule of thumb was if you wanted to build a hydro plant, assume it was going to take 8 to 10 years. If you were going to do coal, assume it was going to take 10 to 12. If you wanted nuclear, assume 15 plus. So if you were going to put your money into that as a hedge fund, as a PE firm, as a publicly traded company doing that, those were the guidelines you were looking at. And when you were talking to your prospective investors, you had to explain, and here's what I'm going to do with your money, and here's what the time length is. So based on what you've talked about now, for investors over the next 3 to 5 years, what are the specific siloed type areas that they could allocate to? What is the time horizon before they should start to see returns? And then number 3, and therefore, who do you three think are the right target audiences to make these allocations?
great question, Bruce. Who wants to go first? Go ahead, Max. And by the way, this is a lot to unpack. So you know what I'm going to do? I'm going to ask BJ. Here's a mic. Thank you. When you have questions, please jump in. Thank you.
I can take it first. So, you have to think about the supply chain of it. So the place where it all starts is we actually need raw materials. And it's this little thing called copper, iron ore. When you think about the replacement factor, if you look at Keystone XL as an example, because people have asked me, it's like, are we going to bring that back? It's like, okay, well, you would have to bring on three blast furnaces for 18 months to replace all the steel that was sold off for Keystone XL. So is U.S. Steel going to bring back 3 blast furnaces? Answer is no. But it doesn't mean that you can't replace some of the pipelines or add to or tap into. So I think that you have to look at on the level of, it's called Freeport. I think copper is really where you want to be because you have multiple sides that this can go. You have going into the actual turbines in terms of the winding, in terms of what's going to go on the wire line. So I really think that copper into iron ore, and then when you start getting into the more complicated nickel, those would be the 3 areas that I would look at on that side. Then when you start looking at the guys that own the pipe and the processing. So my opinion is that growth on the oil and gas side is not going to be black oil, but it's actually going to be liquids. So it's who is controlling the NGLs, who's controlling the LNG, because LNG is where it's going to be. That's where, if you look at the Saudis, you look at UAE, that's where they're investing, is on the natural gas side. But liquids, LPG, naphtha, heavy naphtha. So when you think about EPD, Energy Partners, Targa, guys that are controlling that actually also control the export, because the U.S. is very rich, especially in the Mid-Con and in Texas, on the LPG as well as the naphtha side. And then as you go further up, it's the E&Ps. Like the E&Ps, I think, are in a very good position. Drill Baby Drill sounds amazing as a headline. There is not a single oil company that's going to shoot itself in the foot. It won't happen. And let's be fair, we've already run the maximum amount of light, not to get into the different grades of crude, but a US refiner was built to take heavy sour. So we produce light sweet. The average US refiner runs 33 to 34 API. The average shale produces between 42 and 48 API. So you have to blend it down. So, but I think, in my opinion, you want to invest in heavy oil. So oil sands, things that are in the offshore space, that is going to be on an API level between 25 and 35. If you can find the sweet stuff, that's fantastic, but that means you're in Latin America and Guyana, which I think is a great opportunity. And then on the power front, it's guys that aren't levered to wind and solar. So you look at Ørsted, you look at multiple areas in the Nordics, they canceled, there were multiple failed wind auctions. The wind auctions are continuing to fail. They actually canceled the other two, just because it's like, nobody wants to do this because offshore doesn't make sense. When you think about, just look at, New England ISO today, $220 a megawatt hour. That's absurd. You can't build a business. You look at Germany, Germany's like, hey, here's some perfectly good nuclear, let's shut that down, and then be really angry when BASF decides to leave. It's like, you just shut that down. What are we replacing this with? So I think that that's really how you want to look, and then longer term, I would say that the petchems are going to do well.
So what I heard is between generation, transmission, distribution, you're talking on the raw material and transmission is where the opportunities are.
And liquid gas.
Yeah, and then the E&Ps, and then into the
Why
power
is
gen.
Connor,
Texas
go ahead.
so
Sorry.
positive?
Go ahead,
Why is
Susan.
Texas so positive on land? Why are they in there fighting for the president to continue that? Is it because their investment in the ground is so great?
The short answer is yes.
Yeah.
It's massive. And the problem is they didn't actually winterize them. So there's only 8 gigawatts that's actually winterized. And winterized just means that if you get ice on it, you actually get unbalanced. And if you've ever seen an unbalanced wind turbine, you can go on YouTube, it destroys itself. So you have to put special coatings, which actually makes the ice fall off, but then the coatings come from this little place called refiners. It's based in oil and gas, fun little cycle that we live in. So that becomes a much bigger issue. But yes, it's because there's so much installed capacity and credits.
Connor.
Yeah, Mark, thank you. Very interesting. Would your investment philosophy or plan, you think, survive rather erratic trade policy that we've seen in the last 72 hours?
So it's funny that you bring that up, because erratic is the right way to put it. I think the biggest issue is how do we start looking at some of our friends, which based on some of the policies is who is our friend right now. There's a lot of raw materials just to our friend to the north. I think we have to get more serious about it. I think if Trudeau was a real prime minister, he would easily just say, it's like, oh, you guys want to do this, you can't have any of our raw materials, you can't have any of our potash. Oh, you like that canola oil? No thanks.
I get that.
All of a sudden, it's a very different story, but I think there's a certain rationalization that's coming. And I think at this point, there's more opportunity. There's friends that are being worked on in the Middle East. There's a lot of raw materials there. West Africa.
None of them necessarily copper producers, though. I think that's sure.
So the World Bank and the Islamic Bank have figured out that the CCP is an issue. And why are we going to go against our friends? Because the running joke is, it's like, well, OPEC is evil. It's like, what would you call the CCP? So we're going to go from the frying pan to the fire? So there's an Islamic Bank, World Bank focus. Back to the point on time frames, you need long-term capital. And especially when you look at some of the mines. So there is a push to develop West Africa and further inland. And I think you're seeing that more and more. And that's going to be the new policy coming up to bring that forward. I worked closely with, it sounds terrible now, I was not part of the 2025, but the Heritage Foundation. They've worked very closely on how do we get that forward. And I think that that's going to continue to be the case.
Max, any comments? It's a lot to unpack.
I'm enjoying listening to Mark, but I'm sorry. I was thinking about the comment, 72 hours. Okay. Yes, there are prospects for chaos, but it's encouraging to see the energy triumvirate in the in the administrative space, meaning Department of Energy, Department of Interior, EPA, FERC, all those agencies, at least the leadership, looks as though it understands what the issues are. I don't know if they have the solutions, but their approach, their discussion is correct. How they advocate for these things with the president,
Yeah. Go ahead, please, Mark.
I was gonna say, the big issue that we're gonna have to look at is oil. And I think it's funny when you hear the quote that we're energy independent, and in theory, I understand what he's trying to say, but we still need heavy oil. And that's just is what it is. So if all those tariffs were to happen the way that they were supposed to, that would be about 40 to 50 cents per gallon. If you want to think about how that would actually impact your gasoline. It would actually impact diesel even more. And diesel is the biggest impact if you think about your everyday life. On average, if you think about the just food, food over the last 5 years is up 28%. So there's a huge issue where if you want to fix some of this, and I personally believe, and I'm saying the quiet part out loud, I think tariffs is a quiet way of stopping us from spending, and is raising prices to such a point that you start to see that taper off. And he would rather do that in the first 18 months to cause a slowdown in capacity, slowdown in the economy, because then he could turn around and blame the other guy, and then start taking those tariffs back, say, oh, we got what we wanted, and all of a sudden the economy starts to ramp, and he finishes strong.
I was going to say 9 cents a gallon, that was my estimate, but it's only crude oil. So I was just looking at the impact of crude oil, the percentage of crude, especially that goes into the mid-continent, out of the prairies, mid-continent, the refineries around Minneapolis, BP Whiting, Marathon plants, and it was a weighted average. But if you factor everything else in, then you can twist my arm and say 40 cents a gallon, which would be very serious.
Well, when he adjusted it to 10%, the range was between 5 and 20. So the mid-con runs 70% heavy, 30% light. So there is some flexibility that they had, and that was where the average changes.
Okay. Now, as we said at the outset, we are going to get to artificial intelligence. Okay, but as we head in that direction, okay, let's talk a little bit. I'm going to ask the two Marks to lead the way here. Let's talk about data centers. Okay, Mark, what is your view on what we need to do with data centers? Where are the opportunities there right now? What's going on in that space?
So one of the things the way that we're investing is buying generating assets. So we're buying hydroelectric, things that are base load power that are going to run consistently. And so I'd love to say I called AI. I didn't. We did believe data centers were going to be a big thing, purely because of computing capacity and the fact that we want things immediately. And you start looking at data centers and how they're trying to restructure. So the biggest issue that you have was the initial ones, the Meta, the Google, they wanted 1 gigawatt of data centers. They wanted these massive data centers that they could kind of try to control, and you started to see these big distortions. Now distortions, we're an alternating current. The distortions can be seen in the grid going out 500 miles. So what that means is you're overutilizing your transformers, you're overutilizing your equipment, trying to manage that, and it's a very physical process. These things are actually clicking up and down, and if you think about driving a car 5,000 miles versus driving a car 30,000 miles a year, you get an idea of how quickly these start to break down. So what they decided to do was, okay, well, how about we create micro centers, and we actually have an interface that looks at where the query originated and the complexity of that query. If I want to know when the most recent where the closest Starbucks is going to close before I get to Grand Central, they're going to say, okay, this is a pretty simple query, you can go here. If I want to know the gravitational pull of this new black hole that we just discovered, that's going to be a very different query that's going to get routed in a very different way, because these are the different data centers. Now, me asking Starbucks when it's going to close, I don't care if there's latency, I probably wouldn't even recognize latency. If you're Citadel, latency is going to matter to you. So there's all different periods. So what we're seeing is a willingness to now become more decentralized, stealing from Silicon Valley for those that watch the HBO show, is Pied Piper. You're creating a decentralized, you're not overwhelming the system, and you're trying to capitalize on what it is.
And how are they linked? How are these systems linked? How are these data centers linked?
So the beauty is wireline versus fiber optics. So the thing that they've recognized is it's much easier to go next to the generating capacity, not worry about building new transmission line, which could take 15, 20 years, but instead just dropping fiber. Because fiber is 70% cheaper to deploy. You can already use installed areas, right-of-ways, and this is how they're looking at it, because fiber is fast enough, we would never see the latency. And that's something that we're starting to see more and more.
So it sounds like high-frequency trading was at one point where they would do the colos next to
Yes.
the exchange data centers. The closer you get to the source, the better, the less likely it's going to be late.
And the biggest thing is going behind the meter, and which is trying to get away from relying on the grid.
Yeah, also the latency is much more a function of the compute than the time of flight distance-wise. So when we first started with AI, you had monolithic models. You asked a question, you got an answer. Now we're going to this 01, 03 DeepSeek. These are all mixture of expert, chain of thought, agentic models. What does all that crap mean? It means for your one question may have generated 100 or 1,000 questions in the background, and then it gets back to you with an answer. So now the amount of compute you're going through takes a lot of time. That latency is far greater than the time it takes you from your cell phone or your computer to the data center and then back. So the need to put things at the edge physically close to you for AI is just really not there. The big pole in the tent is the compute latency, and it's going to get worse with a lot more of this agentic style AI, which is a big problem for NVIDIA, which we think is actually really bad at latency. Their chips are good for training, but when it comes to doing the inference, answering the questions, it's not as good as some as newer chips that are coming out. And that's why you're seeing, you saw some weakness in AMD. They didn't do so well when they reported numbers. Where you're really seeing strength is Broadcom, Marvell. They're designing ASIC chips for the hyperscalers, which are going to be just far cheaper and more designed specifically for inference to be efficient. But mostly it's, in the end, if you're going to spend hundreds of billions of dollars, you'd only be giving 80% gross profit margins to NVIDIA. And what people really, what most NVIDIA investors we think miss is the notion that they have this software barrier to entry. We think it matters for training. For inference, you're seeing today multiple, like the Level 3 models, the DeepSeek models can run on any different hardware. So the barrier to entry for inference is low, which means there's going to be a lot more people in it. So the power demands will be there, but it doesn't mean you have to buy NVIDIA to make money.
The interesting thing, and this is something that I'd want to turn back to Mark on, is when you look at power consumption and where the power is spent. So like you had brought up Texas, and Texas is like, oh, we have all this extra gas, come down here, West Texas is perfect. If you've ever been to West Texas, it's a little toasty. So how do you manage your cooling? And that's where you start getting this different area, because when you look at the Northeast, you look at the North, it's, how much power is spent on computing, how much power is spent on cooling. And as you go further south, all of a sudden you see this pivot to the point where in the Middle East, they're looking to put these in the water, or at least submerge them to kind of cure for that power demand for the cooling side. But the thing is, like, do the newer chips, do they require less cooling, more cooling? And those are things that I think become very interesting.
Yeah, well, actually, there's a company called Grok, which is up and running in Saudi Arabia today. And if you look at their the amount of power needed to develop an answer, it's less, a lot less than what you get with NVIDIA. And you're also seeing a company called Cerebras, which is, has a big contracts in G42 from the United Arab Emirates for the same reason. They're looking at these alternative architectures because they're not just cheaper, but a lot less power as well.
You know, Mark, you mentioned that it gets a little toasty in West Texas. I know this question might be a little out of sequence, but are we on the brink of rolling brownouts, do you think?
So the short answer is yes, and it's because we're taking down coal, and it's not so much that, you know, if you look at Massachusetts for an example, you know Massachusetts has already said that they're taking down 3 coal plants and there's nothing you can do to stop it. And they've essentially also said, well, if you do that, you should install an app that's going to give you a 3-hour warning of when a brownout is coming, which is something that they use in Africa. So when you think about the foolishness behind it, you're starting to see this. And so to Max's point earlier about it's very hard to figure out load factors, they run scenario analysis and they say these 8 weeks is where we're going to have the max risk, which is, you'll be shocked to know, the end of June to the middle of August. And then obviously you'll have your polar vortexes, which is also going to stress the grid to the nth degree. So the problem is, how hot is it going to get? Because heat is the biggest issue, not only because we all like our air conditioning, but you'll be shocked to know that electricity creates a heat coefficient that has to be factored into. These wildfires in California, not the most recent ones, the ones caused by PSE&G, were because the line sagged.
Yeah.
Because as the heat increases, you get sag, and then you have these high voltage lines touching treetops. So you have to actually pare back the power you're pushing through in order to keep the sag from becoming damaging. So that's where heat becomes a much bigger issue, which is why they focus so much on those summer months, where brownouts are becoming more and more likely given some of those issues.
So
Max,
I'm
any
hearing
thoughts on
they're gonna put the data centers up on the moon, because it's cold up there. You laugh, but yeah.
So the big one that we've seen is the move to put them into orbit. So it's something that has been talked about in SpaceX. So that's actually, so SpaceX is actually testing the connection. For those that don't know, they're actually testing the speed of the interlink. Because the issue is not so much can you do it, because we can, it's just what is the speed in which the interaction takes place.
So is
And
SpaceX
they're
going to be
also
putting up?
working on that speed of translating the data back down to
Right.
Earth, okay? There are companies doing that specific aspect of putting, the data centers on the moon.
So Susan, is this SpaceX? Is SpaceX going to be
No,
testing?
there are many people investing.
Well, I was going to ask if SpaceX was going to be testing data centers for Social Security up.
So the thing is, like, how do you compress the data and then decompress the data so to make it faster? And that's where it's interesting, because there's the problem is, if you think about some of the movement in information, like, and we can talk about, using a lot of this AI, you can upload your X-ray. And the X-ray then will tell you, this is the second opinion you get. But if you compress and uncompress data, it may show that you have lung cancer because there's a missing component. Exactly, which becomes an issue, which is something that has happened. Teradata was the company that tried to solve this for oil and gas, because the last thing you want to do is take seismic, compress it, and then unzip it, and all of a sudden it looks like there's oil and there's nothing there.
Marc Weiss, any thoughts on that? A question? Yes, sir.
So, so far we've heard a lot about the United States and Texas and California, and from my perspective, the U.S. is a pretty well-organized economy that runs well. We haven't talked about Europe, and Europe has made virtually every energy mistake known to man. And now they're tossing out Germany and France's leaders. There seems to be a transition backlash to the green movement, in which case, from an investment standpoint, I just want to hear you talk about, is Europe more interesting than the United States because it's so screwed up?
So,
Good question.
So there's 2 points to that. So we'll start with France. So Macron, from essentially, let's call it from 2008 till 2021, nuclear was the enemy. You know, we're gonna shut you down. It's ending. So everybody did safety maintenance, not extension of life maintenance. So there became that, and then in 2021, Macron was like, oh, by the way, nuclear's green. I want EDF. I want you to keep these operational for the next 20 years. And they look around and they're like, we didn't do that. We didn't do that maintenance. So now all of a sudden you have this huge backlog to go out and do that maintenance. So there is an opportunity in what I would say is the actual engineering firms and the maintenance firms, specifically in France when you're looking at that build out. In Italy, after 2011, who would have said that Italy would be the leader in this? They actually managed themselves very well. They never went too far away from the diesel side, and I think that they're actually in a very good position. Germany is the one that has made the most mistakes. So you're likely going to see those nukes turning back on. You're likely going to see a build out to bring back some of that capacity. So I do think there's an opportunity on the nuclear side, but I would say it's actually more on the maintenance and the engineering companies that are going to have the most opportunity sets within Europe. They have their own issues. You know, good luck with, you know, Nord Stream 1 is officially dead. Nord Stream 2 is good luck on bringing that back. You know, even if Putin turned around and said, this isn't where I parked my car, none of that is coming back anytime soon. So they're going to need LNG. So LNG has actually been redirected. China is actually reselling all of the LNG, and they're saying it's because of tariffs. It's not. It's because they don't need it. It's actually, and that's being redirected. So I think LNG is going to be a huge opportunity, even though the Germans were laughing at Trump when he said that in 2017.
Thank you. Now, Mark, you have spent 8 years, I think, on artificial intelligence and associated business opportunities. And I think all of us have heard about DeepSeek, okay? Is it real or is it memories? What kind of threat is DeepSeek to American AI initiatives at this point?
I think it's not a threat at all. It was smart and intelligent what they did, but it's also a reflection of actually what they did was very silly. They should have waited for 03 to come out and steal that one. So what they did is something where they used the output of 01 to train their model. That's called distillation. And OpenAI was like, yeah, well, next time we're going to see if there's questions coming from China, we're going to slow that down or cut it off. So they basically they did good work. It's smart. And by the way, everyone should be using this. Let's all use distillation more, using the output of the old models to create training data for the new models. That's a smart thing to do in general. They just did it very well, and they showed with less resources you can get a lot done. Now, did it actually cost $6 million? Most people are like, you know, there's no standard by which there's cost accounting done for training models. So people are going to say, well, the last training run, in terms of electricity and depreciation cost $6 million, but what about the years of work before that and the billion-dollar data center? Are you going to include those costs? Like it's so we think that they're just like let's face it, Israel bombed Iranian nuclear facilities, but there were ones that Iran said they weren't nuclear facilities, so Iran couldn't complain about it. Same thing here. Well, we're not using H-100s because you can't say you have them, right? So we all know that the amount of revenue if you look at the last 10Q from NVIDIA, I think it's like 14 and change billion US, 7 and change Singapore, 5 and change Taiwan, 5 and change China. You're telling me that whole part of the world bought more than the United States? And, you know, it doesn't make sense. And what the heck is Singapore? I know they're a very strong economy, a lot of wealth, a lot of money there, but it's an island, and they bought half the amount of the US. So Obviously, there's been some leakage. They have H100s. They can't say they have H100s. So first of all, it's not as cheap as they said it was. Did they do more with less? Yes, they did. That's the innovation. The silliness of them is they tipped their hand. Here's how we're going to rip off OpenAI, and OpenAI is now wise to it. And now as they're about to introduce O3 and the things beyond it, they're going to take steps to make sure other people can't use distillation, basically taking the output of their model to help train their model. So you can't do it perfectly, but you can slow people down. So I just think it's good for the industry. It's enabling models to get developed perhaps lower cost and faster, and it's which is going to drive the deployment of AI, which is what everybody wants. Because all this training is great, but if you're going to keep spending, you know, look at Microsoft and Google, look at their stocks after they reported. Their free cash is down because their CapEx is up. If they don't start showing that they're actually can get free cash flow up from it, how's that happen? All this AI you have to turn into a business.
Yes.
So you have to, so that only happens when you start building applications that create value. That's where the big home run is. But to a decent extent, I think DeepSeek has helped lower the costs of getting to those next gen models that are higher quality, which is a good thing for the industry. And now we got to see the industry actually deploy these things. Otherwise, it's going to be O2 all over again.
Okay, Mark Rossano, what do you think?
Some of the interesting things, and I think you brought up a great point, is CapEx. When you look at some of this CapEx pivot and where things are, and coming back to your point on, you know, where is their opportunity? You know, the last thing to leave China is always going to be something that's high energy consuming, that's going to be difficult to build. And with AI and some of these other innovations, it's getting a little bit cheaper to build in different areas because you can replicate something and you're getting smarter each time. So you're actually seeing this bigger pivot into the ASEAN nations. So you look at Southeast Asia, it's becoming an opportunity set. They want to diversify away from China. You know, does it make sense? But India is really where you're seeing a lot of growth. And India is a friend. We have with these nice little, it's the best known but not spoken about secret. We have a sub-watching station just off the coast of India where, because the Strait of Malacca is too shallow to stay submerged, so you have to come up. So that's how we track all the Chinese submarines, and then using AI and you know, critical thinking, you can figure out what their destination is. So we want to enable that, and there's a big push to focus on India and enable their growth, which is why we're, you know, if you want to buy Russian euros, you go buy those because it helps us in the long run. And that's where I think, to Mark's point, I think India is going to be a very interesting opportunity set. When you look at, okay, well, China did that, how do we help them? How do we enable them? And in my opinion, Vietnam and India are the two best places.
So Marc Weiss, I think you went, just to go back to the question about DeepSeek, I think the answer that we got was it's not as much of a threat as we may have thought initially, right? Which brings us to the point of how do we support continued growth in AI, given the fact that it is an energy hog, and we are short of energy, right? So let's talk for a second about these small modular reactors. To what extent are SMRs, as they're known, a possible solution, a way to solve for AI expansion?
So there's a lot of promise there, but there's a lot of infrastructure has to happen first. So I'm not an SMR expert. I did invest in one called Oklo when it was a private company, and that was like 2 years ago. And it's what made us say, wow, this is very interesting, is that the old style reactors of the 70s, active cooling, right? That's why you know, Jack Lemmon was feeling the vibrations.
Yes.
In China syndrome, it was the pumps, right? So that's a problem of the old style reactors, and now we have a nuclear waste problem. Turns out that some of these SMRs can actually take that nuclear waste, process it, recycle it 7-8 times, and instead of having something that's radioactive for tens of thousands of years, after you recycle numbers of times, it's radioactive for maybe hundreds of years. So you clean up the waste, and there's actually 150 years of electricity in the existing nuclear waste that we have in the United States today. So that's a huge resource. And SMRs, what makes Austin very attractive is some of them, no active cooling, completely passive. If they get too hot, they lose neutrons. So they're almost impossible to melt down. So they're safer, far fewer. Each moving part has to go through a regulatory process. So the old style water cooled reactors, tens of thousands of moving parts, and they have to be constructed on site. These SMRs can be built on an assembly line, very few moving parts, and not 10, 15 years to get the plant up, right? It could be much shorter than that. But we got to do change to how the NRC operates. These things are underway. Well, most of these SMRs need HALEU.
Sure, and where do they get manufactured, by the way, these SMRs?
Well, not really manufactured in the States.
So we have the capacity now to, we know how to design them, we know how to bring them
Oh yeah.
Okay.
No, but the HALEU, until recently, only from Russia. So there's low enriched uranium, which is what all the old style plants operating on. These things, it's not highly enriched, it's called HALEU, high assay, low enriched uranium, which is, so it's not, you can't make a bomb with it, but it's higher enrichment than what you currently use. We don't have the capacity. Now, the Biden administration got money to start to help get that started. So that, to their credit, they did some good things. We think there's going to be more of it, and so we think it could be a great way to have CO2-free, very cheap electricity. And now the big question is the West still committed to CO2 reduction? And if it is, then these things are a home run. If not, or there's some questioning to how the urgency to get off this CO2, nat gas could be a bigger winner. So, and again, the United States is blessed lots of natural gas. LNG is very expensive, it costs a lot of money to get it cold and transport it. So globally, we think SMRs are going to be a big deal because not everyone's blessed with their own local natural gas, and LNG is it may be better than buying it from Putin, but it's still pretty expensive.
Go ahead, Mark.
Some of the interesting things, when you look at SMRs and the opportunity set, my running joke is when people ask me, it's like, well, what happens if nuclear, starts to eat into your business theory? And I'm like, well, I'd be the first check writer into nuclear as long as you can tell me that if it's not operating by year 5, who's paying me interest and penalties? So the bigger thing that is also happening is, to Mark's point, a lot of these things are being developed in the U.S. and then deployed elsewhere to prove it out, to show its safety. South Africa has actually been a very big point, and it's interesting because I'm sure you've heard the term nearshoring, onshoring. The idea is like how when you nearshore things, you're trying to optimize that globalization. Can you create that power, that renewable component, and put it closer to where you have the processing centers, which a lot of times is in Africa, which is we're looking to be more friendly with, especially in the southern part of West Africa.
So gentlemen, how can the new administration help push this process along? Any thoughts on that? SMRs in particular, are there any ways that the Trump administration, through policy initiatives, can improve the outlook here?
I think the big thing that is HALEU, is really focusing on that, because you can not only take and enrich, but you can also take military grade waste, nuclear waste, and actually step it down. So there's two sides that you can go through if you think about the recycling that has to happen. And then it's just red tape. It's just getting rid of and streamlining, because right now it's your permit needs a permit, that needs a permit, that then needs a comment period. It's like, well, what now? And I think that those are two key areas. Now, as much as we can talk about the Biden administration, they actually were on that path and they were looking at that. So there was that start, and I think you're just going to see that follow through.
Marc Weiss, what do you think?
I agree completely. The last administration started, it was a good start. I think the new administration is going to do it, but you got to do a lot of changes to how we're currently doing things.
Max, any thoughts on this?
Just, the Department of Energy is not so much oil and gas, it's nuclear. Controlling nuclear waste, controlling the proliferation of nuclear weapons. The person who is now in charge of DOE, leadership as they call it in Washington, Chris Wright, is exemplary. And so, I don't know if he started at Oklo, but he was critical to the organization. So he has direct knowledge of what he needs for the SMRs. He is now the political leadership of the Department of Energy, and it's the institution. If you're asking for politically what should be done, it should be driven out of DOE. Now, the Trump administration wants to set up a National Energy Council that wants to put board in charge. Let this policy be driven out of DOE, not out of the White House. I mean, there's so many instances where you see leadership, like say the previous Energy Secretary, Granholm. It was just too obvious. She's taking talking points out of the White House. This isn't what she knows and understands. In this case, you have somebody who is trained, a practitioner, and very capable as far as running point and driving the project.
So before I ask you for closing comments, I want to ask you the impossible question. Given all the developments taking place, the new technologies coming online, the initiatives to enhance our power position, so to speak, where do you see prices going over the next 5, 10, 20 years? I know that the four of us actually saw that information from Bill Gordon earlier today about relative power prices around the world and how expensive it is in the United States, places like California, New York, and so on. So are we heading in the right direction from an economic standpoint? And from a technology standpoint, it sounds like the answer is yes. But from an economic standpoint, will it be enough soon enough?
So I'll take that first. So the answer is no. We're so behind that we have a lot of catching up to do. And so, but how do you incentivize that is you increase price. So you have to increase price in order to get people to bring on new generation, new capacity. And to Max's point, it's like for 20 years, we had really no movement in power pricing. And because of that, we got really lazy. We just said that oil was the devil, natural gas was a bridge fuel, and one of the things that you quickly saw was that the Biden administration stopped calling natural gas a bridge fuel. They just dropped the bridge. Now it's just natural gas is a fuel, and it's really a basket approach. And we need a basket approach to be realistic. Does solar work? Yes. You have to be realistic on the limitations. Instead, we just thought it was a panacea of it'll work right now. It's like, well, that's not how this works. There's a steep drop off starting at 3 p.m. Not when the sun actually goes down, but when it crests. And I think that there's a big push, and pricing is going to go up. And that as the running joke goes in commodities, the way to fix shortages is higher prices. Higher prices fixes this, just like yield fixes this, and you're starting to see that come to pass. And I think at this point that, as someone who's looking at generation, I think there's more pricing to go up. There's lines that have to get fixed. We have not built new capacity for the transformers. So not only is it an issue in terms of cost, it's just the supply chain. Can we build these components fast enough to deploy them?
Okay, Marc Weiss, any thoughts on this?
Well, it's the regulatory changes that are hopefully coming to SMRs. We have a very accelerated rollout, but we need a lot of change first. So that's really a midterm to long-term thing. Near term, it's not going to help much at all, and we don't have the HALU capacity anyway. An opportunity near term that could help, especially with data centers, is potentially fuel cells. And we've seen increased activity with a company called Bloom. They make a very high temperature fuel cell and higher temperature, cycle thermodynamics means more efficient. It's not the same as a combined cycle plant, but to get power, it can take a power feed could take 4 or 5 years. But if you have a natural gas feed, you can buy fuel cells, so you'll be up and running in 18 months. So they address time to power. It's something that ultimately is can be base load. Also very important, data centers need high quality power. If you have a lot of fluctuations in your voltage, and when you mix in intermittence, you get noisy power. And no matter how much you try to clean it up through transformers, what have you, and your AC to DC converters, that stuff ages chips faster. So you're going to spend tens of billions on data centers, and the power you're feeding it causes it to depreciate faster. That's a problem. And again, that's where coming like a Bloom can really come in. It's not just I can get the power faster. It's really good quality power, and it even costs me a little bit more than if I waited, from a combined cycle plant 5-6 years from now. It's okay, and it's better than getting it from wind and solar now. So.
Thank you, Mark. Matt, go ahead. I'm sorry.
I was just going to say that's the comment I made earlier about distortions. And the distortions they've actually found can be up to 500 miles away from these big data centers, which is a huge issue when you think about how that's impacting your home. The piece right outside of your equipment, that step down, which is why there needs to be that interface. Everyone talks about China and how they're 4D thinkers. I think they're actually playing tiddlywinks, because they built all these high voltage lines with no step downs.
Mm-hmm.
And that's where, and then the question is back to the point on what happens abroad. Well, what happens if other people start to compete? We're not the only ones buying these transformers, trying to buy these fuel cells. There's going to be more competition. So that's where it comes down to, what are we building locally? What are we sourcing from our friends? Because that's going to be very important to solidify us as we go forward.
Max, you get the last word here.
Well, just that, I'm sorry, I was just thinking through everything Mark Weiss.
It's a lot to unpack, yes.
Right. But to your question, you started off with some email exchanges that we had earlier in the day, showing prices, residential prices in several different states and what they are in
Yes.
international level, what the trend is. My experience with that is those are imputed prices. They're not posted prices. So it's not a price that motivates behavior. Say like a gasoline price on New Jersey 17, you check your gas buddy on the phone. It's something that's calculated once, so much power was generated, this is how much was paid for it, and this is what the price is per kilowatt hour. So your question was which way posted prices motivate behavior. These prices don't motivate behavior. What motivates behavior, or the types of generating capacity that you have, is you had in certain states very aggressive renewable portfolio standards where it is mandated through, maybe not explicitly, but effectively certain kinds of generation have to be used to the exclusion of others. That's one, and then you have other distortionary effects like the production tax credit in Texas and the investment tax credit in California. That impedes the production of adequate power or having adequate generating capacity. Fix that, and that's my last.
Oh, I know you have something else to say. Go ahead, Mark.
Well, it's always fun when you talk about the duck curve, and we've seen all the different pieces where, so SPP, so a wind farm came online. It was 186 megawatts, and they promised that they were going to build, some backup gen, and then they realized it was going to cost too much, and so they did. So SPP sued. And they sued back saying that they weren't allowed to do this because SPP said you owe us $65 million to build this base load to offset your intermittency. And the judge found in favor of FERC and SPP and said, oh, by the way, it's not 65 million that you owe, it's 105 million. And you're starting to see this pressure point where they have to address these shortages, because the duck curve is great where, all right, you're going negative for 4 hours out of the day, but what are you doing between 5 and 9? And that's where some of these issues are creating almost a need for two grids within one, which is increasing that underlying price and a huge problem.
You know what, that's the last word.